Hello, PI investors. My name's Stuart Dukeman, and you are listening to the Passive Investor Show.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
I just want to take a time out for today's sponsor. A lot of passive investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with passive investing in real estate syndications, I encourage you to fill out the form at johnfortes.com/workwithjohn. Invest today so that tomorrow you have more time to pursue the things you truly love. Once again, that's johnfortes.com/workwithjohn. I can't wait to partner with you. Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. My guest today is Stuart Dukeman. With over 30 years of experience as a business owner, Stuart understands the life of the small, medium-sized business owner, executive, and the precious value of time. Recognizing the value in building wealth through real estate as an investor since 2008, Stuart has moved to help others learn how to easily invest in real estate without sacrificing valuable time devoted to business and family. Today, Stuart continues to run a successful non-real estate related business while still providing others the opportunity to access exclusive private market opportunities from the comfort of their home or office, while generating wealth building passive income for years to come. Hey, Stu, thanks for coming on. I'm grateful to have you on the show today.
Thanks for having me, John. I appreciate it. Looking forward to it.
I appreciate you. You know that. Tell us about your background, how you got into it.
How I got into business or how I got into real estate?
Real estate.
All right. So back in 2008, just prior to the recession, I started, seeing all the commercials and the whole fix and flip phenomenon that was going on back then, and went to a local RIA meeting, with Real Estate Investor Association meeting, and got hooked pretty instantly on the value of real estate in general. And as you mentioned, I was running a business, and I had been since the early 90s. So by 2008, 18 years in of a business, you start getting a little bored, and you start looking for some hobbies, essentially. And unfortunately, I took real estate as a hobby back then, and I got into it. I did a lot of learning, hooked up with a local mentor, and ended up getting into the fix and flip world. But then I quickly realized I wasn't very good at it. And being a landlord, being a rehabber just it didn't fit my time schedule. It didn't fit my personality necessarily. And I ended up, I bought a few turnkey rentals that worked out okay. But then, of course, the recession hit and things kind of crumbled fast. Luckily, at the time, I didn't have a lot of holdings in single family, so I didn't necessarily get crushed. But I certainly lost a little bit of money, and it kind of turned me off from real estate for a little while. When the recession hit, my non-real estate related businesses, I'm in staffing, and primarily construction and light industrial staffing. So the recession not only took its toll on my real estate holdings, but it took its toll on our business because nationally, construction obviously came to a grinding halt during the recession, and we ended up closing quite a few locations. And at the time, it was our focus to just keep the business alive and so forth. But luckily, as the recession kind of turned and things started turning around, I still had my real estate license, and we started taking the opportunity to purchase commercial buildings that we were either previously renting for our staffing business, and realized that, heck, and take the knowledge that I had with real estate and just learn the commercial real estate side of things, start buying our own buildings and leasing them back to ourselves. Seemed like a better profit model for the business. Certainly for me as an individual, it kind of satisfied that real estate need that I had, a little bit of bug. So yeah, that's kind of how I got started in real estate, and that took me up until about this time last year. So
That's awesome. And since then, you've been getting into bigger deals, right?
yeah, so the to be honest, John, a year ago, things were comfortable for me, and we own 9 commercial buildings, and the business is going well, and things were good. But I have a son, and my son is a police officer, and he came to me. We live in Northern Virginia, a pretty expensive metro area. And he came to me and he said, how do I live the lifestyle I grew up on a police officer salary in Northern Virginia? And I kind of chuckled because he passed on the opportunity to come into the staffing business, and that was okay. He wanted to go play cops and robbers, and he did that, and that was all good. So I said to him, I said, with your schedule, you ought to consider getting into real estate. And at the time, my head was fix and flip, and let him go do that, and let him go be that guy. And I figured I'd help him out or whatever. But at the time, I said, but I don't want to have anything to do with it. And he said, well, why? And I said, because it's just not something I want to do. I don't want to be a fix and flipper. I don't want to get into the rehabbing. So he asked me, how do I get started? And I gave him a few books to read. And when he moved out and bought his own home, he pretty much wiped out my entire bookshelf anyway. And he had all the books. And I said, you probably have this one and that one. And, I said, but start with Rich Dad, Poor Dad. And I said, when you figure out what you want to do, let me know. And a couple of weeks went by, and he came over to the house for dinner one day, and he says, well, I've decided I want to get into real estate. And I said, great. And he said, but I'm going to do multifamily. And I said, you're going to do multifamily? I said, that's awesome. Can't help you. And he said, what do you mean it can't help me? And I said, well, I have some educational background in single family, and I have some educational background in commercial, but I don't know anything about multifamily. And I said, where'd you even come up with this? And he said, well, I read a lot of the books that you told me to read, and I watched a lot of YouTube videos. And the one thing that caught me was Grant Cardone. And he got hooked on the idea of multifamily. And at the time, I didn't know where to tell him to go. I didn't know what to tell him to do, but it dawned on me that a friend of mine who got started in real estate almost the exact same time I did had recently posted something on LinkedIn about a multifamily project that she had going on in Texas. And I said, you know what, let me reach out to her and see if she'll talk to you. So I did. And of course she was willing to talk to him. And I said, go offer to work for her for free on your days off, learn the business, see if she'll take you under her wing. And they had a good conversation, but ultimately she said, you don't really know what you're doing. You're really of no value to me. But she made a recommendation that he get some education, and she recommended Michael Blanc's course. And of course, that's how you and I, John, we met. And he, called me after he spoke to her, and he said, hey, this is what she recommended. What do you think? And I said, well, let me look into it. Send me the guy's website. And Michael is local to us, so that gave me a little bit better feeling. But here's what happened. I got on Michael's website, and I started reading, how Michael portrayed the advantages of multifamily. And I was shocked. because it was nothing like the real estate that I had done. And what really caught my attention was the forced appreciation opportunity that existed in multifamily, where we can go in and we can uh, do a value add on a property and increase the rents or reduce the expenses and significantly change the bottom line, which ultimately drives the value for a particular property. That doesn't exist in single family. That doesn't exist in a single tenant commercial property unless you can, significantly boost the rent for a current tenant. And when you are the tenant, you have no interest in really doing that. So in my case with the commercial property where we are the tenant, we don't really have that opportunity. So to make a long story short, I got hooked, and I said to him, I said, well, what are you going to do? And he said, well, I think I'm going to do it. And I said, well, listen, I said, keep me posted. I think you should. If you're really serious about this, I think you should. So a week went by. Hey, did you do it yet? Did you sign up for Michael's course? No, not yet. I think I'm going to do it next week. And in the back of my mind, I'm thinking, I might be interested in doing that. And following week, I spoke to him. I said, did you do it yet? He said, no, but I think I'm going to do it tomorrow. And I said, you know what? I'll do it with you. And he said, what? I thought you didn't want any part of this. And I explained all the reasons, but I've been reading a little bit since then. And I said, I think, when I got started, it would have been nice to have a partner to help me along, because that's probably why I wasn't very good at what I was doing back then with the single family stuff. And that night we purchased Michael's course, and there was a significant learning curve difference between, him and me. And, but we both, at our separate homes, were watching the videos and learning. And it sunk in with me pretty quick. And from there, things just kind of took off. And, we were in business literally within a couple of days, and, had our business cards, and we were networking, and we were meeting with brokers, and we were doing everything that you're supposed to do to get this business going.
So tell us. Well, first of all, Michael's awesome. I'm glad you guys dove in, because that's how I met you, and
Right.
like you mentioned, that's pretty cool. Tell us more about your business with your son. How do you guys structure your company, and what do you guys look for right now?
Sure. So when we set out and we structured it, we just did a straight 50-50 deal, and the idea was that his schedule, he's typically 5 days on and 4 days off. So the thought process was, hey, on those 4 days, you be the broker relation guy. You've got the time to make the calls, go do the visits, meet with brokers in person. And I would leverage my network for raising capital on the syndication side and do some of those things. Well, what we quickly realized was that while he got educated, he didn't have the business savvy to really engage those brokers in a way that earned him some respect with them. So what he did was he made initial contacts, and then he kind of lofted it up to me, or he would have a few deals sent to him, which in the beginning mostly are junk deals that the broker's not going to give you their sweet and juicy deals in the beginning. And what I found was I was spending a lot of time analyzing deals just to be able to provide him some feedback to go back to the broker with. So we did that for about 7 months, and we really weren't getting anywhere. We finally got a property that we had an LOI accepted, and it was I believe it was a 51 or 52 unit deal that was in Virginia, and there was a former extended stay that had been converted to multifamily, and unfortunately, we spent 47 days going back and forth with the seller while we were still under LOI, because there was a zoning issue, and they weren't properly zoned for multifamily. And the one thing I definitely learned is you got to do your due diligence. You don't make exceptions for significant things like zoning issues and so forth. And we couldn't come to terms with the seller on a provision in the contract to tackle the zoning issue. Finally got what we needed from the zoning department, and we ended up having to walk away from the deal. At that point, when you spend 47 days every day going back and forth, you lose a lot of momentum. And at that point, we had stopped talking to other brokers, and we were focused on this deal. And we had started talking to potential investors and so forth to move forward. And we kind of looked at each other and said, well, now what? And in the meantime, that same person who I had put my son in touch with in the first place had an opportunity where we could come on the team as a co-sponsor. And initially we passed because we had our own deal. We were focused on that. And when our deal fell through, I reached back out to her and I said, "Hey, is there still an opportunity for us?" And she said, "Yes." So at that point, we switched our focus and we got involved as co-sponsor on a deal, and we dug into the deal a little bit. We ended up coming out of the gate pretty well from a capital raising standpoint, for given that we got in on a short notice situation, and we helped raise some capital for that deal, and we're successfully able to close on the deal. So that put us our first deal in the books, and therefore we were on the GP side of a deal finally after about 8.5 months. That was followed shortly by a second deal with the same sponsor that we co-sponsored. A similar role, we assisted with some of the due diligence and again the capital raising, and we at that point had put together another decent capital raise, and now we're off and running. And that's what actually led me to my passive investing side. I in good faith couldn't ask somebody to invest in a deal if I wasn't invested in the deal myself. And I know that a lot of people will not invest if a sponsor is not invested in the deal. And you may not have the capacity to invest in every single one of your own deals, but it certainly goes a long way from a trust factor. And if I explain to an investor, listen, I'm not going in on this particular deal because I just went in on this one and this one, that's acceptable. But when you never go in on a deal, you never put up your own funds, it's harder to ask for people to invest with you and have that confidence. As far as what we're looking for now, we are still looking for our own deals. We're looking in that $1.5 million to $5 million range, primarily in the Carolinas and the Southeast. But we're trying to get to the point now where we can work with people throughout the country where they can potentially bring us deals, and we'll help sponsor and get them closed. So
That's awesome. That's awesome. I just kind of want to hit on, how are you meeting your passive investors, and what's part of the deal is the most attractive asset for them to jump in?
So initially, we ended up forming a second company that's called CEO Capital Partners, which has a focus on business owners and executives. And the thought process was, that's my world, and I think it's a little bit of an untouched niche, in the sense that when you go to a meetup, for example, a multifamily meetup, most of the people in the room are all trying to do what you and I are trying to do. We're all trying to learn the business, get our own deals, raise money from that same group of people. And you might be at a meetup with 50 people, and maybe there's 5 people there that are interested in just being a passive investor. But when you go to a Chamber of Commerce meeting, or you go to a local business networking function, traditionally you're the only real estate guy in the room doing what we do. And we particularly like the networking events where there's like a speed networking factor, where you're sitting at a round table of 10 people and everybody's got 30 seconds to give their little elevator pitch. And usually at that table there's a real estate agent, there's an insurance broker, there's a pest control guy. There's a lot of your typical businesses that are there for networking. And then we get our chance to say, hey, I'm Stuart Dukeman, I'm with CEO Capital Partners. We help people invest passively in large multifamily apartment complex to create significant amounts of passive income. And people just kind of tilt their head and say, what? And the next 10 minutes that's supposed to be shared ends up being you talking about your business. And then you go to the next table and the same reaction, because it's not a pitch that people hear all the time. And, I'm actually frustrated by the fact that it was 2018 before I heard about this. If I knew 10 years ago about the opportunities to invest passively, I would be maybe in a little different situation today. And I'm not complaining about my situation today, but I feel like, I invested my money in the stock market. I did cryptocurrency. I did some options tradings. I've got a couple other business holdings and this and that. Not one of them provides the consistent returns, and consistency is the key, right, to this business. But not one of them provides those consistent returns that can be projected well in advance with a simple business plan. And that's kind of what I like about multifamily. And it's not to say that everything's rosy and peachy all the time, but when you can put a business plan together and you know that the building, half a mile down the street has rents of $800 a month, and your building's at 650, and you can make simple improvements, and there's no reason why you can't command the same rent. That's a pretty simple business plan in my eyes. So for me, it was kind of a no-brainer to get involved. And if it wasn't for my son, I'd be comfortable just being a passive investor and not pursuing our own deals and so forth. But, if somebody told me at 24 years old everything that he now knows, life would be very different. So I want to see that opportunity for him and the partners that I have.
I love that. And Brandon, he's an awesome guy. I just spoke to him earlier today, so he's pretty cool, man. And I'm glad you guys kind of got this bond over that too. So it's just another relationship thing that you guys can literally look back and be like, remember when we did this? Or remember when we just started this?
Yeah, I mean, when he was growing up, it was football, 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 and for 13, 14 years, it was all about football, and then him going to college and playing football and this and that, and then he graduates and he's done, and now he's a police officer. And initially, it was all about well, how did this go and that go, and after a month or so, when the police officer newness dies down, it's like, well, what do you talk about? And now it's real estate, and it's maybe in the future it'll be something else and whatever, but it is pretty exciting, and it does give us a lot to talk about. And I talk to him several times a week, obviously, but most often about real estate. And it's good to see him get excited about this stuff, because it'll change his life. It really will. It'll change his life. And I think for anybody out there that's listening, if you've got children that are 18 or above, it's time to get them involved, and they have to see it for themselves. But you should be encouraging it without a doubt. And my son is a passive investor in a deal, and kudos for him for putting enough money away to be able to invest in a deal. But he sees the opportunity at 24 years old.
That's pretty cool. My son's 9 years old, and we just started playing Monopoly.
Yep.
And he was like, Dad, now I get what you're talking about. Because I told him, if you ask him, what are you going to do with $1 million if you won $1 million today or received $1 million? That first conversation went, I'm going to buy this. And I said, what about you buy something that'll pay you so you can go and buy what you want? And that was a light bulb moment for him. But when we played Monopoly, he actually got to see how it worked. And it visually, and by playing, and like I learned by doing, and him by playing, he learned the concept. So yeah, I just hope it sticks with them, and we get to build on that going forward.
It was interesting. I saw a post on Facebook either last night or today, and it kind of, it's a whole mindset shift. And the post was something along the lines of sell blah blah blah, buy home, and then the third thing was buy real estate to create passive income. And I said, well, number 2 and 3 are backwards, right? It sell whatever you got to sell and use that money to buy real estate to create the passive income, then buy your home. Buy things that pay you. It's really a simple concept, but most of the world does it backwards. And we buy the things that we want. We go get fancy cars, and we buy maybe houses that are too big for us, and this and that. And for me, it hasn't always been that way, but it took me till 35, maybe age 35, before I kind of realized I'm doing something wrong. I was making a lot of money, but I didn't have a lot of money. And it was one of those situations where it's like, what's missing? Where's the equation here? Because my W-2 looks great, and own the business, so I was getting money from that or whatever, but at the end of the day, something just wasn't right. And that's when I got into real estate in the beginning, and realized that rental income was definitely the way to go. For me, it just took a little bit of learning to finally get to the point where now the opportunity for us is really in multifamily.
Yeah, you mentioned something about you're frustrated because you found out so late, and uh, that just shows you that multifamily isn't really spoken about. And the way people are getting into it, either they're seeking the education on their own, or they're being referred by their friends and family that are already contributing and participating in these passive investment deals. So there's a lot still on the horizon to come as this starts to become a more known
Sure.
thing to do, or a more known investment. So I sympathize with you there, and I completely agree with that, because had we known about it earlier in our lives, like you said, it might change things.
Yeah, and I think for guys, like you and me and anybody that's listening that's in the business, it's everywhere for us, right? So you think it's, everybody must know about this or whatever, but you realize that that's not the case at all. And I think you had asked me earlier, where are we finding our investors? And I think it was that initial network of our own circle. But what I thought was going to be easy, which was go out and, hey, I'm going to tell these people about this deal, and they're going to see it the way I see it, and they're going to want to invest. And of course, it doesn't work that way, right? There's an education process, and um, people that you think will invest won't. People that you think can't. People that you think can't can. And you really have to talk to everybody. You have to tell everybody. You have to make sure people know what you do. And at some point, your inner circle, that network of people that you have, runs out. And then the next question is, well, what do I do now? And I use a lot of social media to try to educate people on what I do. I'm not trying to sell people on the idea. I'm not trying to pitch it to them all the time. I'm really trying to build it to the point where people ask me. And there is a significant difference in willingness to invest when people start asking you as opposed to you asking them. So it's work, and there's a trust factor. People have known me for 30 years as the guy that owns the temporary staffing company. They haven't known me as a multifamily guy, and I get that, But for us, the solution to that was partner up with people that knew what they were doing, and use their credibility, and use their experience and their success and their track record to show people that I hear you. I understand that, if you're opening a staffing company, you may want my opinion, but if you're getting into a multifamily deal, maybe you need a little bit more guidance than just me. And that was effective. So now we're building out our systems to bring in investors in a new way. Brandon, my son, and our other partner Will have a podcast that's getting ready to launch in early November, with a focus on younger generation. They'll be talking to an audience of 23 to 26-year-olds, and not only multifamily, but just business in general, and kind of looking at things a different way. So given his age and the age of our other partner, they're in it for the long haul. We're not in a rush. I'm not, I don't do this today for the paycheck. And for me, if this is a 5-6 year, 10-year growth period, that's okay, because I just enjoy building businesses. That's kind of what I like to do. And this is a business that we're building for the long term. And, maybe one day I get to sit back and watch my son be the successful CEO of a company.
That's pretty cool, man. I love that. Well, what's one piece of advice you can provide for the PI listeners?
So if you're on the fence about investing in a deal, I think at some point you have to pull the trigger, and there's obviously there's a lot of rules about investing or whatever, but here's what I would be very cautious of, and John, I have no doubt this happens to you. I go to a conference and I give my business card to somebody, and the next thing you know, my inbox is full of deals that they're soliciting for. And a deal packet can look pretty fancy, and they do a great job and they put it together, but there's a problem. And you and I both know that there's different types of offerings, 506Bs and 506Cs. And it amazes me the number of 506B offerings that I receive from people that I don't know. And for me, if I'm a PI listener right now and I'm receiving those deals and I'm contemplating getting involved, I wouldn't. I would just absolutely stay away from that. I would not just because you don't know the person that well, but because something's wrong in the way they're going about it. And eventually, if they're willing to take those shortcuts and put you on their list without having the substantive relationship that's required, they're going to be willing to do the same in other areas of their business. So for me, it's an integrity issue. And I think it speaks volumes about the people that are willing to do that. I'm willing to give you my business card. You want to reach out to me, you want to get to know me, you want to build that relationship, no problem. Then put me on your list. But if you start sending me deals and all we did was shake hands and walk away from each other inside of 20 seconds, you've got no business sending me a deal. And as an investor who's contemplating getting in, I would just stay away from those deals. And I would definitely work with people that I've formed a relationship with that are doing it the right way.
Yeah, when you're seeing it from our side, we know how to weed them out really, really easy than the normal investor. And my main goal when I go to a conference is not to receive as many cards or to hand out as many cards. I'm literally going there to learn from the people that I find in the industry that are going to be on stage or talking. If it's us speaking, we had the opportunity to speak on a panel together this summer. I'm learning from people at a higher level. And for instance, if I give out my card or I make a connection with someone, when I come home, I am not adding you on my list. I am sending you a personal email and I'm giving you the option to go on my list. So I don't want to just come home and do exactly what some people are doing. And I have received those and I unsubscribe.
Sure.
Go ahead.
Well, I was just gonna say, and we have in our system, our CRM system, people are tagged, right? And if I meet you, I'm going to put you in our system, but I'm going to do kind of exactly what you said, where I'm going to, take the steps necessary to build that relationship. And, when we put you in our system, if I've already known you and I had that substantive relationship, I'm tagging you that way. But if I don't, there's a field in there that we set up, that we created that says substantive relationship established, yes or no. And if it's a yes, we put a date. And if we don't have that date and we don't have that marked as yes, when we go to do our bulk emails to distribute our deals, you don't get the deal. It's that simple. And, would I love to send the deal to everybody on the list? I would, but that's not following the law. And, again, the biggest thing, and some of the people that I've received the deals from, on the surface, I don't know them very well, but they seem to have a good reputation and they seem to have good deals. The problem I have with it is just that it's a shortcut they're taking, and the people, they know. It's not that they don't know. The education surrounding the right way to do it has certainly been out there. So it's not a matter of they don't know and they're just doing this by mistake. To me, it's indicative of a shortcut that they're willing to take. And I've been in business long enough to know that if you're willing to take this shortcut, then you're willing to take a shortcut down the road. Yeah. And that usually isn't in the best interest of investors.
Yeah, just to, I guess, hammer it home. I received an offering shortly after the event that we were at this summer. Right. And I reached out and I said, look, I know we met at the event and I can't even remember who you were, really. But at the same time, please don't add me to your list if I did not agree to it. And I never heard back from them.
Yeah. Well, that's that event it has filled my inbox with those deals, and I'm sure it's a lot of the same people. And again, they're not necessarily bad people. No, it's just just from a business perspective, that's my opinion. And if you're listening right now, I would that's the advice. I would question the authenticity of that sponsor if they're willing to do that. So,
and just that event that we were at, it was probably one of the best events that I've been to all year. So
yes,
that was a really good one.
So
go ahead, Stu, how can we reach you?
So best way is going to be through email. It's Stuart, STUART @ceocapitalpartners.com. And you can visit our website, obviously, at www.ceocapitalpartners.com.
That's awesome. I appreciate you, Stu. Is there one last piece you wanna leave with us, or?
Listen, I think in this business, there's a lot of people that get involved, and everybody says, "Well, I want to get my first deal done, and I'm going to do a deal, and I'm holding on to my money for my first deal." And I think that for some, that's a mistake. We recently had an investor come in on a deal, and when I first spoke to her, she kind of laid out a certain amount of money that she had set aside, and that this is what she wanted to do, and she invested in the first deal, and everything looks good. And then I reached out to her when we had another deal. Oh, well, I'm going to do my own thing, and I'm going to do this and this and this, and I kind of know her situation, and um, it's not always the best thing. And I think that, if you're looking to get into the business, being an LP, being a limited partner in investing is a great way to get started. Not necessarily something for down the road. I think it's a good way to see how other sponsors handle things. You can certainly ask as a limited partner to try to be a little bit more involved, maybe ask a little bit more details than some investors may, maybe ask to kind of have that curtain peeled back a little bit so you can see behind the scenes and get educated that way a little bit. So I think that being a limited partner and passively investing in a deal is a perfectly fine way to get into the business. So,
Absolutely. Thank you for sharing that, Stu. Appreciate your time today.
absolutely, John. Pleasure having you, or pleasure being on the show.
Thank you. Guys, if you want to learn more about Stu, I'll leave all his information. Just go to the show notes. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.